So today I'm going to discuss three stocks first, which are DRC Systems, InSwift Limited, and South Indian Bank. In this video, we'll uncover the financial strengths, strategic moves, the growth opportunities, risks, to guide you guys to make a decision from this one. Okay, so just be aware of these are the stocks just for education purpose. You have to do your own due diligence. The first one I'm going to talk about is the DRC Systems India Limited, a tech powerhouse in IT services and digital transformations. They specialize in mainly in software development, enterprise applications, AI, ML based solutions, and cloud based services. With a global presence across diverse industries like education, healthcare, and logistics. Let's see what makes the business tick for our pick. So, did you know that DRC Systems partners with the big names like IIM Bangalore, Gujarat Metro Rail, from government agencies to a global corporations like Happiest Minds. So they are revolutionizing operations with cutting-edge IT solutions, a true partner for progress. So DRC System is more than just a tech company with expertise in AI, ML, which I have already mentioned. They are into ERP systems and robust cyberspace security cyber security related stuff. They are transforming businesses worldwide from US to Middle East. So let's check out how their numbers looking like. So it has an impressive growth thing with a 62 crore in revenue, a 29% year-on-year growth, and a robust EBITDA margin of 32%. So DRC System is delivering truly a good results. Their 16 crore PAT and EPS growth shows their financial resilience, but they are a little bit high in the PE ratios. Looks like overvalued, but in a longer period, when I talk about the technical, I'll explain about the DRC system, how the PE value and what can be expected out of that one. Why I should invest in DRC systems? So they are robust, low debt, high margins, which makes them investors' dream. But so watch out for intense. There are competitions already. A lot of service companies is there. We need to just look at the risk and reward ratios. So I'll just try to explain the technical part so that we can decide. You can think about more about the valuation and what to look into this one. So this is DRC's chart pattern over here. If you see, since a very long time, since 2021, since their IPO time, it was consolidating at the flat area and it went high and there's a pullback, and if you see again, it is having a triangle breakout. If you see, this was a triangle breakout, and this big green candle, right? Normally this is a fifth wave and this is a correction wave. So it seems like this correction is done now because it has touched the fourth wave and it is getting into the momentum wave. So for example, this could be our 1 and 2 wave. It could be like the 1, 2. And we might be expecting a third wave here, then fourth wave and fifth wave. So this is what I'm expecting for now. But there are scenarios that it may consolidate again in this area and then can go. So whatever it is possible. So during the consolidation, there could be a chance of reduction in PE. But as per the current status, it looks like having a good momentum. If you see, RSI is almost reaching the 60, above the 60. The momentum has peaked, is what I feel. If I go for a one-day view, see a good volume and see this is higher high. There is no divergence. It's a very clear breakout and the momentum we can see. So it looks like a promising stock for me. Okay. So that is how DRC looks like. The next company we are going to look into is Swift. India's Swift Limited. From a strategic alliance with Pharma giants to serving 45 countries, India Swift boasts a powerful international presence with over 3,200 stockists in India, and they are solidifying their market leadership at home and abroad. So next company which we are going to look at is, let's see, India Swift Limited, a pharmaceutical leader manufacturing APIs and formulations for critical therapeutic areas like cardiovascular and antipsychotics. So their focus on R&D drives innovation across both regulated and semi-regulated global markets. From strategic alliances with pharma giants to serving 45 countries, India Swift boasts a powerful international presence. With over 3,200 stockists in India, they are solidifying their market leadership at home and also in abroad. India Swift achieved almost 502.25 crore in revenue, growing by 22% year on year. But shrinking profits and high debt at 815.77 crores are a little bit concerns. The question is, can the strategic initiatives turn this around? India Swift is not sitting idle. Their manager with InSwift Labs aims to unlock synergies, while debt restructuring and equity sales are part of their roadmap to financial stability. For example, what they are planning is there is the main company which is Swift Laboratories. So they are trying to have a merger with Swift Laboratories so that the debt they can clear the debt. But it's a very bold move. But will they pay off? Time will let us know. But currently, it's okay to have. It's not a big deal. Okay. So expanding into niche therapies and investing in R&D are strong growth drivers for InSwift, but high debt and regulatory risk little bit a concern. As an investor, would you bet on their resilience? So we'll look into the technical also so that to understand how it currently plays. So if you look at the technical part of InSwift, you can see the initial days it was at the IPO starting price, man. The first initial days it was around in the 2005 alone it was around 300 rupees. Okay, so then you can see it was how it went down and corrected for a very long time. It's a weekly one. If you see how long it was consolidating. Okay, so this is a current state it is, but the overall the current, if you see this kind of a long-term consolidation is what something time you will get a good return in the future. So that these are the stocks that you can say invest and just forget about kind of a fine. Okay. Whenever it breaks out, then you can add more to that. But currently it is in a good position. If you see the channel patterns, the consolidation, it is like a cup and handle kind of a pattern in the cup and handle. And also it is consolidating. For current scenario, if you see, it's a triangle pattern, and there's a good breakout over here. You can clearly see how volume breakout and RSI strength is also showing good over here. And it's currently trading at around 27 rupees. It's a good stock to look into at this point of time. Just think about it. Okay, put it in a watch list. So overall, if you see the InSwift, they have potential to grow, and they are having a good R&D department. They are into API manufacturing, a different thing. But the debt is the only concern. Apart from that, nothing else. So the debt also consistently they are reducing it. So once it becomes a debt free, it will you can see the real momentum of the stock. The next one which we are going to explain is about South Indian Bank. This is a blend of a traditional and a digital banking service, because few areas in South India side, this is like a darling bank for South Indian people. So this stocks, some still people go and visit the bank, so they cater both digital as well as the physical presence, and they are specialized in retail loans, trade finance, and treasury operations with a strong foothold in South India. So let's explore more about this one. So this is the recent financial highlight. The South Indian Bank reported a net profit of 325 crore, which is an up by 18% year on year, with the deposits crossing of 1.05 lakh crore. And their CASA ratio is improving a lot, and good news for deposit quality and margins. But what about asset quality? So let's find out further on that part. Here's a snapshot of the financial health. Net interest margin is at 3.24%, which is with a target of 3.5% to 4%. And if you look at the gross NPAs are getting down to 4.4%, showing a very good progress, and they are aiming for a cost to income ratio below 50% in the next few years. The bank is on the path of true real transformations. South Indian Bank's expertise in gold loans, which is a very good thing, because gold is something like a hedging kind of a thing, and gold is also, we are expecting to grow. So cost price is going to grow more, and currently they are getting a regional dominance in gold loan as well as, and they are having a high CASA deposit base, or it's very strong in that area, the CASA deposits. But still, will it give the edge in the competitor sector, because there is so much competition around this. There is so much competition going around the private sector, the private bankings, and also PSU banks. So whether this will survive, time will tell. The rate cuts didn't happen, but they reduced the CRR now, so that might give a little bit of edge for increasing liquidity and lending more loans. Let's look at the technical part of South Indian Bank now. If you look at this, what is it, like technical part, if you see how this was the year high, this was the all-time high, which was happened in December 2017, and it went down and it corrected a lot, consolidated, and it went up. And again, if you see, this is a fifth wave, consolidated. This was a correction phase, and now it is South Indian Bank has bottomed out now, and you can see a reversal sign over here. It is a good momentum you can see here. This is a good momentum here. Volume wise, it's a very good volume. Still in the weekly wise, if you see the RSI is not at crossed, but if I go to daily basis, it has crossed. So basically, there could be a little bit of correction again, so that RSI may go down. We need to see RSI up in the weekly view to get a very good momentum. Okay, but still, because this huge candle may sometimes what will happen is we need to go slow by slow. Whenever you see a big candle or something, there is a chance that there could be a correction can happen, or all those things can take a time to consolidate at this phase. Okay, but now it's actually a reversal sign. I feel so. The positive signs, which is a CRR reduction. So there's a chance that again it may go back to 36 price range, and again may there would be a pullback and then go. But this is a good thing to have a long-term bet. So there's already a reversal has started in South Indian Bank. So just to see a comparison between the three stocks which we checked, so we all three are different sectors. One is IT sector, one is pharma sector, and one is a banking sector. So we have a very good diversified sectors here, and DRC is a good having a good potential. In SWIFT, there is a little bit of risk in that one, kind of because of the debt nature. But South Indian Bank is truly in a very good position. Revenue growth, all these companies are having a good potential in revenue. If you see the risk wise, right? If you see this is a minimal debt, this is a moderate debt, and this is banking kind of thing is they give loan, right? So don't need to worry about that part. Valuation wise, DRC looks little bit of above the little bit of high valuation. In SWIFT is moderate, and South Indian Bank is also moderate. So these are the things you need to look into that. So hope you got the clarity about all these three stocks which we discussed. Please have it. You also please go ahead and research these stocks and put the comments what you feel about these companies. Okay. If you like this video, please don't forget to give a thumbs up. Don't forget to share this to your friends and families, and don't forget to press the notification icon. Thank you.